All right, fellow AMC stockholders, XMAX Trading here. I want to go over the latest DD, exciting news from AMC that came out today, November 28th. So let's get started. Hit the subscribe button if you haven't already. Click the like button, and let's get started. So, all right, so I got some screenshots. So Adam Aaron on Twitter announced the NFT idea. So this came from you, partnering with Sony Pictures for the AMC's first ever NFT. More than 100 unique Spiderman NFTs given free to the first 86,000 online buyers of US AMC. December 16th tickets. That's the opening night. No Way Home. Only for Stubs Premier A-list and Investors Connect members. Wow. So pretty amazing. I mean, I think it's gonna go pretty fast. And but yeah, this is one of the things we want. People are wanting an NFT dividend for all shareholders, but I think they're doing NFTs for certain movies, and you got to be AMC stockholder, be part of, the AMC Connect or AMC A-list Premier for Stubs Premier. So yeah, it's a pretty exciting thing to have happen. This could, for one thing, it could make owning the stock more valuable than trying to short it, because the NFTs may have value, right? You could get the NFT link, and they could be valuable in the future. It's a unique NFT to the movie, and then NFTs are allowing the company to some degree to count the number of shares that are out there. You can only get an NFT if you're a verified shareholder. So yeah, I mean, you can count individual shareholders perhaps. The other thing is that what I've been hearing on Twitter is that this is a shot across the bow, saying that more NFTs are coming. And this is a way to kind of get closer and closer to counting the number of real shares out there. And then the fakes may need to get out. They want to get involved in NFTs somehow and get that value and get out of trying to short the stock. So, Adam Aaron can't say these things. But I think these are improving the business, creating new business lines, but also forcing out the short thesis and forcing out the shorts themselves. But they can't do anything that would actually perpetuate a short squeeze, that would actually ignite it, because they get sued for that by the shorts, even though the shorts are kind of wrong in the situation, but whatever. Another piece of news, breaking news from Twitter: Citadel and related members of FINRA have reported that margin usage and debt is at all-time highs, along with other indices at all-time highs for the market. Leverage and margin and equity all-time highs are often an interesting combo for many reasons historically. So the VIX shot up, the market kind of went down, and the VIX shot up with GME and AMC back in January. The same thing in June with AMC. The market would go down and the VIX would climb, and AMC would climb after that, because they knew they had to barf up these shorts and try not to blow up the whole thing. Let's go over here. From Zero Hedge, Tyler Durden. Let's see. Hedge funds are suffering their worst week in 6 months, and that was before Friday. Last week, Lexi's Black were the Red Friday's illiquid market meltdown for one of the post-Thanksgiving apes. And the collapse of oil bulls was one of the worst drops in history. We expect to see much of the solve to reverse in the coming hours, as the narrative that Omicron is the second coming of the bubonic plague is quickly played down by the biggest propaganda, whatever. Unfortunately, reversal sells tried a little comfort to hedge funds who were already getting hammered post-Thanksgiving turmoil, because according to Goldman Prime, the GS equity fundamental estimates fell negative 1.7% between 11/19 and 12, driven by the worst alpha drawdown in 6 months and a beta of negative 0.44%. Market exposure and market sensitivity combined. So that's interesting. So, on some positioning details, gross leverage rose 1 point, 237%, while net leverage fell. Overall book lost to whatever ratio fell. In retrospect, someone may have had a correct feeling that was coming, because heading into the Friday puke, GS Prime saw the biggest net selling in more than 3 months. I think 1.5 standard deviations. Driven by short sales, and much larger extent, long sales 10-1. As Goldman Prime retails single names and macro products, both net sold made up 54 and 46% of the net selling. On a geographic basis, managers reversed recent trends and rotated out of North America. Saw the largest net selling in 7 months while moving to EM Asia. 8 LF sectors sold in dollar terms: infotech, financials, industrials, staples, materials, real estate were net. But while staples, materials, and real estate were net bought. More importantly, hedge funds bought reopening stocks and sold stay-at-home names despite reports of new COVID variant. Constituents of Goldman's used basket, collectively net bought, while constituents of GX stay were sold net. At the same time, hedge funds sold global financial stocks at the fastest pace in more than 6 months. Sold the global financial stocks. That's interesting. Maybe that has something to do with, AMC and other shorts. Despite recent selling, financials winning versus MCI. But still, hedge funds are having a tough time. So I don't know, guys. I think this is coming to a head. So we'll see what happens. Until next time. Later.